Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. Many subscribers asked me to make a stock analysis video about NIO stock because NIO stock dropped as much as 35% in the past 3 months. Many Chinese stocks also dropped more than 30% in the past 3 months because of the rising US Treasury yield, the fear of higher inflation rates going forward that will affect all growth stocks, and the ongoing political tensions between China and US that impact pretty much all the growth stocks in China. Many people ask, is NIO stock still a buy, and is NIO stock overvalued right now? And what is NIO stock's intrinsic value per share? I'm going to answer these questions in this video. So in this video, I'm going to cover these topics. First, I'm going to talk about NIO's risks. Right now, I believe there are 4 major risks. The first major risk is the global chip shortage and battery supply issues. The second major risk is increasing EV competition in China. The third major risk is why NIO will not be profitable anytime soon. The fourth major risk is why NIO needs continued support from the local government. I will also talk about NIO's long-term growth prospects in this video. Then I will talk about NIO's competitive advantage, as well as NIO's upcoming autonomous driving tech. Before the end of this video, I will share with you my intrinsic value calculation for NIO. I will share with you what is NIO's intrinsic value per share. At the end, I will talk about am I going to buy more NIO stock. If you like this video, hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and commentary videos every week that will help you become a great investor. Let's start. The first major risk is this. Right now, all the car manufacturers in the world are experiencing global shortage of chips and even battery supply constraint, especially for electric vehicles. Because of the global chip shortage affecting all the car manufacturers in the world, NIO's vehicle deliveries may get impacted throughout 2021. This is same as any other car manufacturers, even including Tesla or the traditional gasoline car manufacturers. For example, NIO temporarily suspended vehicle production in its JAC manufacturing plant for 5 working days in March. William Li, the founder and CEO of NIO, said this. He said, for the second quarter of this year, we will still have some risks regarding the chip supply. But starting from last year, our team has already kicked off the communication and the collaboration with our supply chain partners to secure the sourcing of the chip. We even have some direct communications with the chip suppliers to make sure we have sufficient supplies of the chipsets. We believe for the second quarter, we should have the chip supply to meet our basic demand, but the risk is still quite high. Regarding the battery supply, this is another constraint for our second quarter performance. We do have some limited supplies regarding the 100 kilowatt hour battery pack and other battery packs, which is actually less than our demand because right now the market is actually quite booming. And starting from July, we believe the battery supply should go back to the normal level and meet our demand. So because of the constraints of the battery supply and the chipset supply, our production capacity will kind of be limited in the second quarter to around 7,500. William Li also said this, and so we now have the capability to produce 10,000 units per month by having 2 shifts in some workshops. However, just like I mentioned, because of the constraints of the chipsets supply and the battery supply, in the second quarter, we may only be able to secure an overall supply chain production capacity of 7,500 units per month. But starting from July, we expected to elevate the overall supply chain production capacity. And just like I mentioned before, our partner JAC has already kicked off their further production capacity expansion. So it means that probably the annual production capacity is going to reach 150,000 units under 1 shift and 300,000 units under 2 shifts by the end of this year or the beginning of next year. 7,500 units per month means that NIO can potentially produce or deliver 90,000 vehicles this year in 2021, compared with NIO's 43,728 vehicles delivered in 2020. The best case scenario is that NIO should deliver about 10,000 vehicles per month or around 120,000 vehicles delivery in 2021. Here's NIO's second major risk. Right now, there's a lot of electric vehicle competition in China. For example, according to this February 2021 article here, you can see that there are many EV and plug-in makers in China, including Wuling, Hongguang, Tesla, BYD, Li Auto, Xpeng, Great Wall Motors, and many others. You probably have not heard of many of these car manufacturers in China before. NIO competes in the premium EV space. So NIO premium EV competitors include Tesla, BYD, Xpeng, and Li Auto in China. Now, I believe Tesla will remain the #1 pure-play EV manufacturer in China, not NIO, because Tesla has a much stronger brand in China as well as in the world. Tesla also owns its Gigafactory in China, has a much better autonomous driving tech called full self-driving beta, and also has the first mover advantage compared with the NIO. Chinese customers love SUVs. Tesla started selling Model Y in China, competing directly with NIO's premium EV SUVs, ES8, ES6, and EC6. Personally, I expect Tesla's Model 3 and Model Y will remain the top premium EVs in China. I believe that China's EV market is big enough to have multiple premium EV makers, including Tesla and NIO. Pricing of the premium electric vehicles is the most important factor to gain more EV market shares in China. Also, NIO's biggest competitive advantage includes its battery as a service, which reduces the upfront costs to buy NIO cars, and NIO's battery swapping stations. I'm going to talk about this later on in this video. NIO's third major risk is that NIO will not be profitable anytime soon. However, here's one important milestone NIO recently achieved. NIO finally achieved positive cash flow from operating activities for the full year in 2020. If you look at this financial here, you can see that NIO had negative cash flow from operations every year in the past few years. Right now, NIO is not profitable yet. NIO hasn't reported any earnings yet. We should not expect NIO to be profitable anytime soon. For example, NIO had to be bailed out by a local Chinese government in 2020. I'm going to talk about this later on in this video. Because NIO is still in the early growth stage, NIO has to issue more ADS shares and issue more convertible notes to finance its growth. For example, NIO just issued 78.2 million ADS shares in December 2020. All these additional shares and convertible notes will definitely dilute NIO's shares outstanding. NIO still needs many more vehicle sales each year to become profitable. NIO delivered 43,728 vehicles in 2020. In comparison, Tesla reached 500,000 deliveries in 2020 to finally have stable and consistent net profit and free cash flow growth. So it may take NIO the same number of delivery like Tesla to finally have real profit and to finally have consistent free cash flow growth. NIO's fourth major risk is that NIO still needs continued support from the Chinese government in order to grow further. I believe this is NIO's biggest risk right now. For example, NIO was bailed out by a local Chinese government in 2020 during Q1. When the pandemic affected all car manufacturers in China, NIO did not have enough cash to continue its operation. The biggest problem is that NIO China is now 24% owned by a group of Chinese state-owned companies, meaning the local Chinese government has a huge control over NIO China right now. According to this Simply Wall Street article here, the government supported NIO by offering it a 7 billion RMB or $1 billion bailout last year, providing the company some much needed financial support. The company's cash was down to 863 million RMB at the end of 2019 from 3.1 billion RMB in the preceding year. While it did receive financial support in the form of a 1 billion bailout last year, it came at a cost. The 1 billion was provided by a consortium of state-owned organizations. In return, NIO needed to establish a separate company, NIO China, and transfer its core assets in China, valued at around 18 billion RMB to the new entity. Assets include research and development, supply chain and manufacturing, and NIO Power Network, battery charging, and power swap facility network. The investor group will own around 24% of NIO China, along with voting rights, and the rest would belong to NIO Inc. This is from Bloomberg. NIO struck a definite pact for a 7 billion yuan, $1 billion investment from entities led by a municipal government in China, elevating concerns that the electric car maker is running out of cash. As part of the deal, NIO will transfer core assets and businesses in China into a new company and hand over 24.1% of the entity to the new investors. NIO will own 75.9% of the company called NIO China and will inject 4.26 billion yuan of cash into it, according to a statement on Wednesday. This is a very important battle by a local Chinese government. Right now, we can only invest in NIO Inc. NIO Inc owns 76% of NIO China. That owns NIO's core assets and businesses, including vehicle research and development, supply chain and manufacturing, sales and services, and NIO Power. The rest, 24% of NIO China, is owned by the local Chinese government and a group of state-owned organizations. You may not know this, but NIO doesn't own its factories in China, not like Tesla. NIO uses JAC Motor, which is also a state-owned organization, to manufacture its vehicles and pays JAC fees on a per-vehicle basis. NIO sales also benefit from Chinese EV subsidies. Now, I want to talk about NIO's long-term growth prospects. William Li's long-term goal for NIO is to sell 1 million vehicles in China, compared with 43,728 vehicles delivered in 2020. This means NIO still has a long way to go. As of now, China has the biggest EV market in the world. NIO competes in the premium EV market in China. So NIO's biggest EV competitors include Tesla, BYD, XPeng, and Li Auto in China. Personally, I believe that the EV market in China is big enough to have multiple large pure player EV makers like Tesla and NIO that only make EVs. As of now, Tesla's Model 3 and Y are on average cheaper than NIO's high-end ES8, ES6, and EC6 SUVs. Instead of competing with Tesla directly, NIO's core strategy is to convert more buyers from Mercedes, Audi, and BMW to NIO. William Li, founder of NIO, said this: "We believe our main competitors are the gasoline cars at the same pricing level that is around 300,000 RMB to 400,000 RMB. William Li also said this: "Starting from this year, we are going to enter the Europe market. We will build our own sales and service network in the European market. Right now, we have already kicked off the preparations regarding the team setup, products, and the sales and the service network building, basically covering all aspects for our operations in Europe. This is going to be part of the long-term strategy for us to enter the global market." Regarding the US market question, we have already kicked off the research about the US market entry at a very early stage. We have started about the possible business models, strategies, and different approach about how could we enter the US market, but this will require a lot of patience and we would like to do this step by step. Personally, I believe that it will be very hard for NIO to penetrate the European and the US markets and gain a significant market shares, especially NIO's branding is not well known in these two markets. I believe NIO has a much bigger chance to focus on the Chinese market and to gain more market shares. So what are NIO's biggest competitive advantage? NIO's first biggest competitive advantage is its battery swapping stations, which is much faster than charging an electric vehicle. Right now, NIO has 190 battery swapping stations and around 130 power charger stations in China. NIO's management said this in the latest Q4 2020 earnings. NIO has built 191 swap stations in 76 cities. Starting from the second quarter of this year, we will gradually deploy the Power Swap Station 2.0, which offers better experience with lower cost. Our target in 2021 is to ramp up at least 500 power swap stations in total. Moreover, we will step up our efforts in building our supercharging network and destination chargers. We currently have 127 power charger stations and over 1,700 destination chargers, which will reach 615,000 respectively by the end of 2021. NIO's second biggest competitive advantage is its battery as a service program. Right now, you can buy NIO cars much cheaper upfront without the battery because the battery usually costs the most money for an EV. Under this battery as a service program, you pay a monthly fee of 980 RMB per month for a 70 kilowatt hour battery or a monthly fee of 1,480 RMB per month for a 100 kilowatt hour battery. Before this battery as a service program, NIO's ES8, ES6, and EC6 electric vehicles are more expensive than Tesla's Model 3 and Model Y in China. By using this battery as a service program, NIO's ES8, ES6, and EC6 pricing can actually compete with Tesla's Model 3 and Model Y pricing. NIO's management said this: on August 20, 2020, we introduced the Battery as a Service, or BaaS, which allows users to purchase electric vehicles and subscribe the usage of battery packs separately. If users opt to purchase an ES8, ES6, EC6 or ET7 model and subscribe to use the 70 kilowatt-hour battery pack under the BAAS, they can enjoy a 70,000 RMB deduction off the original vehicle purchase price and pay a monthly subscription fee of 980 RMB for the battery pack. On November 6, 2020, we launched the 100 kilowatt-hour battery pack with battery update plans. If users opt to purchase an ES8, ES6, EC6 or ET7 and subscribe for the 100 kilowatt-hour battery pack under the BAAS, they can purchase the vehicle without the battery pack while paying a monthly subscription fee of 1,480 RMB. Here's the important part. William Li said this. He said, just like I mentioned in February, the battery as a service take rate among the new orders has reached 55% and is growing every month. Now, 55% battery as a service take rate is a huge advantage for NIO because it converts many first-time car buyers to buy new electric vehicles instead of the traditional premium gasoline cars from, let's say, Mercedes, BMW, and Audi. If we consider NIO's Power Swap Station 2.0, battery as a service, and NIO's upgradable batteries, all of these services remind me of the early days when our smartphones needed swappable batteries. But eventually, most of the smartphones nowadays no longer have swappable batteries. Personally, I believe that the power swap station is a short-term solution, but in the long run, we shouldn't need power swap stations when battery charging is much faster and efficient, and when there are enough electric vehicle fast charging stations everywhere in China or around the world. Now let's talk about NIO's upcoming autonomous driving tech. You may want to know, is NIO's autonomous driving tech very competitive right now, and it's a huge competitive advantage. NIO announced its EV sedan ET7 on the NIO Day in January this year. NIO's ET7 sedan will ship in 2022. ET7 is NIO's autonomous driving car competing directly with Tesla's Model S. This is from NIO's website. The ET7 unveiled at NIO Day is NIO's first sedan model and the first smart electric flagship sedan with autonomous driving capability. The latest NIO autonomous driving NAD is enabled by the super sensing system NIO Aquila and the supercomputing platform NIO Atom. NIO Aquila comes with 33 high-performance sensing units, including 11 high-resolution cameras of 8 megapixels and 1 ultra-long-range high-resolution LiDAR featuring 4 NVIDIA Drive Oryon SoCs. NIO Atom boasts 1,016 TOPS of computing, becoming the most powerful mobile computing platform in production models by far. NIO has built up the full-stack autonomous driving capability to provide a safe and effortless point-to-point autonomous driving experience that will gradually cover scenarios like expressways, urban areas, parking, and battery swapping. Right now, Baidu's Apollo Robotaxi tech is far ahead of all the competitors in China, including NIO's upcoming autonomous driving tech. Baidu's Apollo Robotaxi already achieved level 4 autonomous driving without human intervention. NIO's ET7 sedan with autonomous driving features will not come out until 2022. Tesla's current full self-driving FSD beta is likely also far ahead of NIO's upcoming autonomous driving features. Now let's talk about NIO's intrinsic value. I want to share with you my intrinsic value calculator to show you whether NIO is still overvalued, fairly valued, or undervalued right now. There are many ways to value a stock to find its intrinsic value per share. One of the best ways to value NIO to find its intrinsic value is to use its future cash flow and then discounting its future cash flow to the present day. To find NIO's intrinsic value, we're going to use NIO's operating cash flow, not free cash flow, because NIO is still in the very early growth stage and NIO does not have consistent free cash flow yet. NIO had 1.95 billion RMB operating cash flow in 2020. It was the first time NIO had achieved a full year operating cash flow. If you look at my intrinsic value calculation here, there are 3 key assumptions. The first key assumption is that I'm expecting that NIO's growth rates will be somewhere between 50% to 100% each year over the next 5 years. The second key assumption is that we're using a discount rate of 15%. This is higher than the 10.3% WACC discount rate from Finbox. I'm using a higher 15% discount rate because I believe NIO has more risk compared with many other stocks. The third key assumption is that to calculate NIO's terminal value, we're using a comparable company. We're using BYD's 5-year average 24.29 price to cash flow multiple from Morningstar to calculate NIO's terminal value at the end of year 5. You may not know this, but BYD is one of the largest car manufacturers in China, backed by Warren Buffett. BYD also makes electric vehicles in China. Let's look at this intrinsic value calculator right here. Under the worst case scenario, we're using a growth rate of 50% each year over the next 5 years. If we project NIO's cash flow to the next 5 years and then discounting it to the present day using a 15% discount rate, then NIO's intrinsic value as a whole company should be around 179 billion RMB or 27 billion US dollars. And if you divide this by NIO's average shares outstanding, then NIO's intrinsic value should be around 16.67 per share. I'm giving this a probability of 1/3. Under the normal case scenario, we're using a growth rate of 75%. If we project NIO's cash flow to the next 5 years and then discount it to the present day using a 15% discount rate, then NIO's intrinsic value as a whole company should be around 377 billion RMB or 58 billion US dollars. And if we divide this by the average shares outstanding, then NIO's intrinsic value should be around $35 per share. I'm also giving this a probability of 1/3. Under the best case scenario, we're using growth rate of 100% each year over the next 5 years. If we project NIO's cash flow growth to the next 5 years and then discount it to the present day using a 15% discount rate, then NIO's intrinsic value as a whole company should be around 724 billion RMB or 110 billion US dollars. If we divide this by the shares outstanding, then NIO's intrinsic value per share should be around $67 per share. I'm also giving this a probability of 1/3. Again, to calculate NIO's fair intrinsic value, I'm giving these 3 case scenarios a probability of 1/3 each. If we multiply all these 3 case scenarios by their probabilities, then NIO's fair intrinsic value as a whole company to be around 65 billion US dollars, compared with NIO's current 62.46 billion US dollars market cap as of April 9th, 2021. So this means NIO is either likely fairly valued right now or slightly undervalued. If we divide 65 billion US dollars by the shares outstanding, then NIO's fair intrinsic value per share should be around $40 per share, compared with 38.12 per share as of April 9th, 2021. Again, this means NIO is either fairly valued right now or slightly undervalued. So am I buying NIO stock? I only have a very small position in NIO stock in my fiance's portfolio. That is less than 0.3% of our stock portfolio combined. Now, I'm not planning to buy more NIO stock because I believe that NIO has a lot of risk we should all consider. For example, NIO China is currently 24% owned by a local government and a group of Chinese state-owned organizations. I am planning to buy more Tesla shares instead of NIO because Tesla, in my opinion, is much more undervalued compared with NIO at the time of making this video. If NIO's cash flow can grow 50% to 100% each year over the next 5 years, I believe NIO's fair intrinsic value is around 65 billion US dollars as a whole company or $40 per share. Now, all of these are only my opinions and my analysis based on my research. You will need to do your own research and do your extra due diligence. If you like this video, hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and commentary videos every week that will help you become a great investor. This is Victor from the Intelligent Investor channel. Thank you for watching and supporting, and I will see you in my next video.